Hey, have you heard of the Augusta Rule? I'm sure it's like the big rage. Everyone talks about the Augusta Rule on TikTok and on Facebook. They tell you basically that you can pay yourself up to 14 days. You can rent out your home to your business for 14 days and pay yourself super high fees, and then it's tax free. So I wanted to come with the truth. I want you to know exactly what the rules are and how to do this for that you do it correctly. And that's part of the tax advisory that I offer is basically I make sure like when we are implementing these tax strategies for you, you have to do it correctly and with all the correct documentation for that, if you get audited, it's in the gray area. Everything that we talk about is in the gray area, but you have to be able to, if you get audited, you have to be able to prove it. And like that's the key is being able to prove it and what to do. So the first thing is, yes, like if you have a home and you use it for your business, if you have a dwelling place and you use it for your business, um, you can technically rent it to yourself up to 14 days for the year. And this is um it's called the Augusta Rue because in Augusta, Georgia, there's a big golfing tournament that's held there. And obviously, there's people on Congress or who are writing the statutes who wanted to be able to rent their house for people when they're coming into golf, and they wanted to be able to do it tax free. So guess what? It got put in the legislature so that it is correct. Here's the keys that you need to do. The first thing is you need to look up comps. What would your house rent for? Let's try Airbnb. Like, what would a house that's similar to yours rent for by the day? I would also look at hotels. What would it be if you were to rent a hotel conference room, and kind of take out and kind of maybe merge the two to an average of the two to see what it is? Because the hotel conference room is going to be able to have um, you know, whiteboards and I don't know, big TVs and stuff, projectors and stuff that you may not have in your house. So we need to take into account for all of that. So just make sure that you have very good docs, like comps, document it, keep it, and we're going to keep it in a safe place. Like make sure it's electronic. And we want to do this for every time. And there's also like if you're looking at Airbnb, sometimes there's comps that are higher more popular times of the year that create more revenue. So you might want to hold those meetings during those higher revenue times that we have comps for, and that will stand up in IRS court if we go there, right? So make sure that you have really good comps, and if it's by the square footage, do that. The other thing is you definitely want to exclude your home office. If you have the home office, exclude that footage, that square footage. I would put a tape up a sign that says do not enter, have that picture of that, put that in the documentation. Also made sure that you had the door closed that day, pictures. And you might want to do the same thing for bedrooms. Like if you don't want people going all into your bedrooms or the kids' bedrooms, do the same thing for that and then just focus on the common areas that you guys would be in to figure out that. So then the next thing you need to do is have a rental agreement. Like you need to have a rental agreement between the business and your personal residence that you're renting it. And it has to be for a meeting. Like it has to be for something legit that is going to benefit the business. So if you are meeting with employees, if you are meeting with your board of advisors or board of directors, which I've talked about and why we want to do this, like go watch that video. You can find that. If you need to meet with customers, if you need to meet with vendors, anything that would um, benefit your business, that would be a great meeting to have. You can have yearly meetings, you can have quarterly meetings, and then just make sure that you document it. So these meetings, how long do they have to be? They have to be at least 4 hours and 1 minute long to constitute as a full day um, worth of meetings. Like, and I would probably go at least 4.5 to 5 hours worth of meetings during the day for that one day that you're renting out your house. And then you better have someone there who's taking really good minutes because you're going to need to have minutes that are signed off on of what actually happened. Like if you want to, you know how there's those recorders that can come onto Zoom. There's all kinds of different AI recording devices, and they can literally type up your minutes. Well, and then have your receptionist or your VA go ahead and edit them a little bit better. Keep the important stuff in if and then just make sure that they're legit. Make sure it's on the calendar. You want to have as much documentation as you can to actually prove that, hey, we had a legit meeting. It was for business. It benefited the business, and like it's actually there, right? Um, and then guess what? At the end of the year, so by January 31st of the following year, um, for say this year, you need to send your personal self a 1099, 1099 miscellaneous under rent. For however much you paid for rent to your personal residence, to yourself, whatever's in that rental agreement, you need to pay yourself a 1099 miscellaneous. If you don't do that, there's a potential for, I think it's $100. It's a small amount if you don't file the 1099 like you're supposed to. And then on your personal tax return, you actually have to put the 1099 miscellaneous. It goes on a Schedule E as income. And then, so I don't know, say it's $3,000 that, say you had one meeting or two meetings and it was $3,000 worth for the entire year. You'll want to make sure that has goes in as income. And then on the expense, the other expense, there's a code number that you need to put in. It's the actual section of the code. I can't remember it off the top of my head, but you just put that in as other expense. And then for the same amount that you have as rental income, you're putting it as rental expense. So it zeroes out, so it washes. But the IRS is going to be looking for that and making sure that you're complying. One, making sure that the 1099 is done. You're putting that section of the Augusta code in there as an other expense. And they'll be like, oh, okay, cool. And those are the key things that you want to make sure that you do if you're going to do this. Rent out your personal business, rent out your personal residence to your business. Um, so it's not as easy as just everyone says, but yes, your business will be able to deduct that as an expense however much you pay to your personal residence, and then you get to claim it over here on your personal side and you'll pay no taxes on it. Just make sure that we do everything, document, do everything legally, keep up with the compliance. And we want to do this for every time we have these meetings. We want to follow these steps. So yes, we can do it. We just want to make sure that we're doing it to cover our butt in case we get audited. I hope that was helpful. Again, if you need any help with tax advising, that's my specialty. I love getting to know my clients, having that comprehensive consultation. We spend about an hour, hour and a half together. I ask you all kinds of impersonal questions, or they're very personal questions. Like it might make you feel uncomfortable. But once I see the big picture, I can figure out which tax strategies to help you implement, to help you save money on taxes, protect your assets, which is I mean, there's no price tag on that, and to help you create a legacy. Again, there's no price tag on that. Um, and just go ahead and book that first discovery call to see if we're a good fit. Thank you.